Final 2 hours of what has been a truncating but exciting week as we head into yet another truncated week. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I am Hormas Patakia. With me is Vamakshi Thoria. Vamakshi, good afternoon. The bulls are all set to end the week on a high, and they would hope that this 450-point surge sustains by the close of the trade.
Well, absolutely, Hormas. They've made a thumping comeback, and they're saying that we're here to stay because, you know, we've held on to that level 22,850, 22,900 since morning. But, you know, there's a lot lined up for our viewers on our show. So let's get started with some of the top headlines. It is an almost all green screen as stocks react to Trump's 90-day pause on tariffs after trading holiday on Thursday. Metals and consumer durables are the biggest gainers. Mid-cap index surges over 2%.
Tire stocks like Apollo Tyres, CEAT and MRF gain after CLSA initiates coverage with an outperform rating. Brokerage expects margin improvement led by softening of input prices. Just before we could finish these headlines, there are some important flashes on your screen. China has announced that they will be increasing their tariffs on US goods from 84% to 125%. This is after the US reiterated last night that the tariffs on Chinese goods is 145% and not 125%. We just heard public comments from Xi Jinping for the first time after this tariff escalation. He said that China is not afraid to take countermeasures against the US, and this will mean that these tariffs will now be imposed from the 12th of April. And just as we speak, the Dow futures are still up 120 points. They were up almost 400 points at one point of time, but still there are some very sharp swings that we are seeing in the Dow futures currently. But the trade war continues to escalate between the US and China, and that was one of the factors that led to a very sharp sell-off on Wall Street in yesterday's trading session, giving up a third of what it had gained on Wednesday. So now China has announced that they will be raising tariffs on US goods to 125%. It will take effect from the 12th of April is what has been announced. So more escalation from US and China. It will be interesting to see how the US response to this is later this evening. But for now, the Dow futures have now begun to cool off from that. Still 100 points higher. We'll get you more developments as the show goes by. But by the way, for our own markets, we are still hunky-dory as of now. 450 points higher on the Nifty, marginally off the highs of the day, if you could call it that, still around that 22,850, 22,900 levels. The broader markets too doing well for themselves in today's trading session, led ably by metal names, pharma names, and of course some bit of moves seen in a lot of these other stocks, including the likes of Atul and a lot of these pharma names like Wockhardt as well. But some of the other movers in the broader markets, there are plenty of them today on the gaining side of things, and Vivek is here to tell us just that. Vivek, good afternoon.
Well, good afternoon. You know, the news flow doesn't abate at all, especially when it comes to retaliatory as well as reciprocal tariffs between US and China. But overall, Indian markets are very, very strong, especially in the broad end of the markets. You are seeing a very good advance decline ratio. Look at the pharma stocks. A lot of worries, but today all of them have rebounded very sharply. No specific tariffs have come about as yet, and also a lot of positive news flow. So the entire pharma pack, especially some of the broader, pharma stocks from the broader end of the markets, or mid-cap pharma names like Laurus as well as Granules, doing very well in this session. On the other hand, have a look at the agriculture as well as chemical stocks, the specialty chemicals names. Remember, they were the ones that were impacted the most on account of tariffs. On back of pausing of these tariffs, the entire pack, PI Industries leads the way, SRF, UPL, Navin Fluorine, Aarti Industries, all of these stocks doing very, very well. The metal pack, you know, again, we saw the top line stocks or the stocks with much higher market caps doing very well in the morning, and that rub-off effect has come about even among the other names as well. Look at names like Lodge Metal up 6%, APL Apollo Tubes up 3%, SAIL 3% higher. So very strong, the metal pack as well. Look at some of the volume buzzers, Dixon Technologies and some of the other EMS names too doing very well. Dixon over 7% higher, Sirma again 7%, some positive rub-off as far as realty is concerned, Oberoi as well as HDFC AMC amongst the top gainers. But amongst the list of laggards, not too many today, but Muthoot Fin does stand out. Increased regulations coming in as far as gold loan lending is concerned. Muthoot Fin down 5%, and Max Healthcare on strong volumes. This particular stock is down almost 3% today.
Well, thank you so much for that, Vivek. That's quite a comprehensive list. And, it's a good time to welcome in Nagaraj Shetty of HDFC Securities for a technical check on the market. Good afternoon, Nagaraj. Thank you so much for joining with us. The market has seen a good recovery since, where we left off on Wednesday. It's the bulls have made a thumping comeback, but are they here to stay? What are the levels indicating?
Hi, good afternoon, Momakshi. The upside bounce of the last 3-4 sessions has certainly changed the sentiment of the market after a violent decline recently. I think Nifty is currently placed around the resistance of around 22,900, 950 levels, and the way it has bounced back from the lower levels, I don't think that hurdle is going to be there for a long time. So I'm expecting Nifty to upside breakout of this hurdle, and in that scenario we could reach the next overhead resistance of around 23,400, 500 levels in a quick period of time. So I'm expecting upside bounce for the market in the near term.
Nagaraj, good afternoon. Thank you for joining in. Any specific stock recommendations that you have for the afternoon?
Yes, good afternoon. I have two stocks from the mid and mid-cap side. First, mid and large cap side. First is the L&T Finance. Chartically, L&T Finance was moving in a consolidation, and recently it had made an attempt of upside breakout. The chart pattern is looking positive, even sector as well. Currently trading around 155. I'm expecting this to move further. One can look to buy at this point of time. 165 would be the target, and one can place a stop loss at 150. Second one is from a shipping side, Shipping Corporation. Shipping Corporation was moving in a consolidation pattern. Higher top, higher bottom is visible on the daily chart. Recently, it has witnessed an upside breakout of the downsloping trend line, but showing consolidation. Currently placed around 170.50, and I'm expecting further upside from here onwards. One can look to buy at this point of time, and the target would be around 180, 182 levels, and one can place a stop loss at 165.
All right, thank you so much for that, Nagaraj. We'll keep an eye out on L&T Finance and Shipping Corporation of India, which are your top picks. But on that note, let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other side, so don't go anywhere. Stay tuned.
Welcome back. And just as the escalation between US and China intensifies, China has increased the tariffs on US goods to 125%. The US futures have seen a very, very sharp drop from the highs. The Dow futures at one point were up 400. They had started to cool off from the highs before this flash was on our screens, but now the Dow futures are down as much as 160 points as we speak. Very, very sharp swings already in the US futures as tensions between both the largest economies of the world escalate with regards to tariffs. But back to our own markets, the entire stocks are in focus after a positive CLSA note, and Sudarshan is here with more on this. Sudarshan, CLSA has some very interesting remarks, particularly on MRF.
So CLSA has initiated coverage on all the three major stocks, MRF, CEAT and Apollo Tyres, and it sees an upside up to 35% or say more than 30%, with the most upside is seen in Apollo Tyres, followed by CEAT and MRF. So target for Apollo Tyres is 566, for CEAT it's 34.93, and for MRF it's almost 1.29 lakhs per share. Now, what's the rationale between initiating coverage with outperform call? It believes that the sector, basically this tire market, is undergoing a structural improvement in terms of profitability. Also, the input cost in the last few months have come down. That's going to help margin, which is at a lowest point in the last few years, and that is likely to see an improvement going forward. Also, valuation is poised to improve over FY 26-27. And another important point that it has said that base sector is currently at a bottom of the margin cycle. Now, this input cost coming down, even structural change that sector is seeing, all around, there is going to be an improvement. These are the reasons that CLSA has mentioned, and because of these reasons, it's positive on the sector.
So Darshan, thanks a lot for that. 3% higher is MRF and 4% higher is Apollo Tyres. A high conviction outperform coming in there for Apollo Tyres from CLSA. So in very firm grip are a lot of these tire names. At the highest point of the day now is Apollo Tyres at 425. But the other one that's doing well today, though, is PI Industries. And after Donald Trump announcing a 90-day pause on tariffs, at least for now, Amakshi, what do you have on that one?
Well, absolutely, Hormaz. There's a 90-day pause on the tariffs that is coming from the Trump administration, and a beneficiary of it turns out to be PI Industries. Why is that so? Because they have a very high export exposure. If you look at the 9-month FY25 revenue mix, exports as a percentage of revenue stand at 83%. And within exports itself, they have a very high exposure to the North American markets. The North American markets contributed almost 44% to the company's revenue. Apart from that, there's also a note that has come in from Investec, and they say that they have a buy call on the counter, target price of 4,170 per share. But what they're highlighting is that the US-China tariff escalation, with US raising the tariffs on China to 145%, will actually increase the cost of imports from China. This in turn will give a competitive edge to agrochemical manufacturers which are present in some other countries. Apart from that, what they've also highlighted that there were prior concerns on Chinese generic competition coming in for pyroxasulfone post patent expiry in calendar year 25, and these concerns now appear to be mitigated, which is a very big positive for PI Industries. In fact, as far as some other markets are concerned, apart from US, PI Industries enjoys patent protection, and therefore the potential Chinese dumping that could come through may have a limited effect on PI Industries. China de-risking may also continue to gain momentum given the kind of tariff war that is unfolding right now, and PI is expected to thrive in this backdrop. So the 90-day pause boding well for PI Industries.
Indeed, boding well for PI Industries, 8.5% higher there, a very good move seen on the stock. What's not boding well though is for the dollar index. After these announcements that China has made, the dollar index has now slipped below levels of 199.6 is where the dollar index currently is. The lowest level since July of 2023 is what we are seeing on the dollar index, currently at 99.9, but again below the mark of 100. Remember, at one point at the height of these tariff escalations, of course we don't know whether we have reached the heights of it yet or not, but at the start of the tariff escalations, the dollar index had gone up to levels of 110, but I have now cooled off very, very sharply. Below levels of 100 is the dollar index. Take a short break, get you more on the markets, this tariff escalation, and a lot of stock specific action on the other side. Stay tuned.
Welcome back to this roller coaster edition of Midcap Radar. It's been quite a day today. When we look at some of the stocks that are actually gaining momentum in trade today, look at the pharma pack, right? Wockhardt Pharma is one such name. That stock is up and away in trade. Kaplan Point is one such other name. Look, the stock is also, gaining momentum in trade today on the back of very strong volumes as well. Let's also pull up the chart for Jubilant Pharmova. That stock is also higher, and Laurus Labs is one such other name. Apart from that, companies with exposure to US are also perking up after the 90-day watch. That this list actually includes Welspun Living. Over the last couple of sessions, all of these names had been beaten down. Welspun Living is up, LT Foods and PI Industries as well, just a short while ago. But moving on, we let's also focus in on the FMCG space, because sources are telling CNBC-TV18 that Dabur's Hajmola candy is under the DGGI scanner. Timsy is now joining us now with exclusive details. Timsy?
Well, yes, as you rightly said, what we are picking up from sources is that the Dabur India and DGGI are at loggerheads. What we are picking up is that Dabur's Hajmola candy is under DGGI scanner, that is Directorate of GST Intelligence, that is currently investigating GST classification of Hajmola candy under GST. To be precise, this is the Coimbatore zone of DGGI, which is currently investigating whether Hajmola candy should be treated as Ayurvedic medicine, attracting 12% GST, or as a candy under 18% GST. Meanwhile, what we pick up during the investigations, Dabur is claiming that Hajmola candy is an Ayurvedic medicine and not a regular sugar-boiled candy. Meanwhile, when we reached out to Dabur for a formal response, the email query sent to Dabur remains unanswered. And also an alert here, Dabur in the pre-GST regime faced a similar challenge and through Supreme Court had got a clarity in the favor of the company, stating that Hajmola candy is an Ayurvedic medicine. Also important here to note is that Dabur is already facing a tax demand, and Dabur on 1st of April actually disclosed that it has received an income tax reassessment order demanding 110.33 crores for the financial year 17-18, where the income tax authorities allege that Dabur made incorrect claims for tax deductions related to in-house research and development, and this is under Section 14A of the Income Tax Act. But Dabur claims that they plan to challenge the demand. So let's see what happens when it comes to the GST classification of the Hajmola candy, because whether it is a regular sugar-boiled candy or an Ayurvedic medicine, something that we'll have to wait and see. Whether the Supreme Court decision in the past actually is in favor of the company or not, something that we'll have to wait and watch for.
You keep an eye out on that, Timsy. Thanks a lot for that information. Shifting focus to Apollo Hospitals now is looking to raise capacity by 2,500 to 2,700 beds. Parikshit caught up with Apollo Hospitals' Shobna Kamineni and started by asking her about the growth and expansion plans of the company. Listen in.
Apollo Hospitals, we saw that there was a necessity as our, as capacity of most of our hospitals is close to about 75+%. And we had to move into that new expansion. And I think my sister Sunita is always very cautious. But at this point, we were able to actually get some really fine properties, whether it's Gurgaon, Pune, Mumbai. So these are cities that we didn't have enough presence in, and moving there. And of course, we're expanding in Chennai, doing another one in Hyderabad. So these are cities that we really have a strong presence. So going deeper into cities that we are and moving into other new cities. So yes, there's some exciting expansion happening in Apollo.
Right. If you can give us some numbers to quantify that, how much would you be investing in this expansion in FY26, and what is the overall bed capacity that could increase as a result?
So we're looking at increasing about 2,500 to 2,700 beds, and of varying investments, because some of them are really high tech, from things like a proton to a tertiary type hospital to just augmenting some of our secondary. So with all that, I think we're looking at something of over the next, we started last year. So the cycle of it, the investment cycle, would be anywhere in the range of 3,000 crores.
Okay. Speaking about the story of Apollo 24/7, this enterprise is now completing about 5 years. Could you give us a sense of the journey so far and the contribution of Apollo 24/7 to the larger group?
So sometimes, I like to say that we're actually a COVID baby. We started on February 5th, 2020, just before the lockdown. And during that time, it was almost a trial by fire. We didn't sleep for at least 18 months, because all of a sudden you've launched a platform and you expect to kind of grow slowly. And all of a sudden what happens, it hits you when you get 70,000 orders a day, when doctors who are shut off from their patients, we onboarded 3,500 doctors in 45 days to be able to connect them to their patients. So this really is the ethos, the story of why we're there with that. We could have been just, creating an omni-channel, just making sure that pharmacy is doing well. We know that e-commerce, there was 1mg, there was PharmEasy and all these. So we said we need to have another muscle, and this is another capability. So we could have done that. But I think we stepped back and said, that doesn't serve. It still is so transactional. What is it that a patient needs? And it was so fortunate that we really had a platform that had consultation, that would give people diagnostics, that would be able to give them medicines. And just that capability that we started with was just amazing during that 1-2 years. Of course, there was a lot of failure, but then you're flying midair and refueling and keep changing. And then post-COVID, we fell off a cliff. Just like the rest of the world, telemedicine, they were almost, everyone wanted to come back to see their doctor. Then even in the other part, we were really burning, thinking we're an e-commerce company. So I think the last 2 years really got our act together. So I think this is the time that it's a very short maturity cycle to think that in 5 years you can go from start to actually becoming mature and profitable. But that's the journey of Apollo. That we had the capability to do it.
Right. So it was almost like a startup in a sense.
Totally.
Totally. And, startups sometimes have a long road to profitability. How has that panned out for you?
So I think they had at the beginning, they always said that it's a disadvantage to have an old founder who didn't understand burn with this when they kept coming to me with metrics and saying...
You can't call yourself old from any angle.
No. But look, I'm not... this is a business. E-commerce is a business that my kids should be doing. So they said, oh, you don't understand this, of how you have to burn and you have to do all this. And then one fine day, I really learned. I listened for 2 years and then I said, enough. This just is not working. How can a company work that loses money? You have to make money. And at that time, when we really sat down and said, and we did a lot of true navel gazing, and we said, we have these customers. We have 40 million people who are loyal, who love us. How do we serve them better? By being omni. And I think that was the eureka, that we really started doing so much better. So I would think the journey of the last 2 years is just refocusing on our customer, saying that how do you serve these customers better, and then more will come in.
And in the latest round of escalations between the US and China, China is now headed to the World Trade Organization, filing a new complaint against the tariff impositions by the US. And they have mentioned that there is no possibility of goods being exported to China at the current tariff levels. And this is the complaint that China has filed at the WTO against the latest tariff measures by the US, which now stand at 145%. And in response, China has just increased the tariff levy on US goods to 125%. The US futures are seeing very, very sharp swings between gains and losses at the moment. No clear direction whatsoever. The dollar index remains below 199.6 is where it stands. Gold prices, though, which had seen some bit of cool off from record highs, is now back to levels of 32.40 as these tariff levels escalate. So a lot happening. We're still 5 hours away from US markets to start, and there is a lot that is still awaited. But we call time on this edition of Mid Cap Radar from Amakshimi and the team that put this show together. Thank you so much for watching. Your stocks on the other side.